Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hello everyone, checking in, and it was a wild day in the markets today. So we had the gap down open that set the tone to start the day, and then after a bit of a bullish start, maybe the first 40 minutes, the bears came in, knocked the price down, and then of course really the overhang now is all this tariff news and China's coming into play, and it really gives CNBC and all the talking heads a narrative to latch onto, and they're going to spin this all this week, all next week, until there's something else to talk about. And of course that's going to incite some fear in people. And as we know, the market's a bit overdone as is, so this is now leading to weakness. Because we closed at the low of the day, it's very notable, and the odds of a gap down are pretty high because there was pretty much no bounce at the end of the day today. And we can see back on the February dump, when we closed at the low of the day, we had a gap down, low of the day, gap down. So definitely watching for that potential tomorrow. We have lost our key daily support level. So this higher low from March 2nd, which is the must-hold level for a lot of individual names, that broke on a lot of individual names today, specifically SPY, which is what I care about more than anything. So that now shifts the tone. We are definitely looking bearish on this chart now. Before, we were still looking for the possibility of a higher low. That's no longer possible now. So it shifts things where we are looking for a bounce just because we've seen 9 red days in a row, and the odds that we're going to head right back down to the February low are not likely without a short-term bounce. But on that short-term bounce, we're going to be looking for bearish entries, and we're going to be looking for, people selling into that bounce to try and get out. So if we see a gap down, of course, we're watching the hourly RSI levels. When the hourly RSI, let's see, when we were dumping crazy back in February, the hourly RSI did get down to single digits. So we have to keep in mind that is possible. And the 4-hour RSI got down into the teens, I believe. So the daily RSI got right to oversold, right at 30, and then bounced. So if we see a gap down open tomorrow and some weakness, this daily RSI is going to be in the low 30s. But again, just the bottom line that I want to make is that the bears are clearly in control now, but we are more likely than not to see a short-term bounce before breaking the February low, 251.91. And again, stock charts adjust for the SPY dividend that was distributed. So if you're looking on TradingView or something else, my numbers are different than yours because when you distribute a dividend, your stock price artificially changes overnight. It doesn't gap down, it just opens lower to factor in that dividend. And that's why I use stock charts, because they're one of the only places that will artificially, or it'll change the charts to reflect that artificial change in the price. So futures right now are looking pretty red. I don't really pay a whole lot of attention to the futures after hours because I'm not trading and it won't matter. I'm not going to miss anything. I'll catch up when I wake up in the morning. And oftentimes things do change by then. So I look early in the morning first thing. That's what I look at. So here we are on the weekly time frame, losing the middle Bollinger Band. That is notable. We're going to have to see a very strong bounce by the bulls tomorrow. Absolutely not likely to see that happen. So we are likely to lose this weekly middle Bollinger Band. And again, we now have our lower high on the weekly, so if we drop down and break the February low, it's going to be a very significant trend change on this weekly time frame. And the last time we've seen a clear weekly change like that was back in the end of 2015. We had a dump, and it went into early 2016, and that was the last time that that had happened. Checking the Dow was the first to break today, losing that support of 24,217 by a lot, closing down at the low of the day. So we're going to get maybe a little tell here from the Dow. If the Dow breaks the low of 23,360, that will be notable, and we'll say, okay, that increases the chances that SPY is going to break that level. If it holds, then obviously the odds are very, very likely that SPY is going to hold. Again, just looking for a short-term bounce and a lower high to be set. Weekly time frame, losing the middle Bollinger Band, clear bear break, and it's the lows of February, and then we're going to start looking at longer term levels, but one step at a time. No need to zoom things out at this point. We're going to stick to our range since the dump from February and watch how we react to that price. IWM is positioned way better than everybody else. The higher low on the daily and the must-hold level is not even in sight right now. We could see another 2 days the same as today before we get to those levels. So we're definitely going to be holding some sort of support on IWM. And if the bulls do show up on a bounce, maybe we want to look to IWM to play this bounce because it is clearly the strongest market. So once the bulls show up and the correlation picks up, we'll see if that means that the IWM bulls can turn things around and see a stronger bounce. Weekly time frame, middle Bollinger Band support going to be tested. Again, not going to lose the higher lows this time around, perhaps in the future, but not anytime soon. VIX with a bull break today, strong close up above the upper Bollinger Band near the high of the day. We broke resistance of 2187, and we're looking now at 2622. So a strong move for the bulls, bull MACD cross, shifting the trend in their favor in this weekly time frame. If we close strong, it'll definitely be notable. We won't have these big upper wicks of profit taking, but the momentum is shifting again, and it's definitely, there's a lot of people that are looking for a big move in the markets to pull back, and we're now getting a potential catalyst to help move that forward. So bears have momentum. On any bounce attempt, we're watching the hourly time frame, and on SPY today we had that solid bounce, but it rejected from the hourly exponential resistance, the 4 and the 8 period, and then the price dropped right back down almost in a little bear flag on the hourly. So we're going to have to see an hourly higher low and higher high to change this momentum to have any kind of confidence in these bulls. So just keep in mind that it's up to the bulls to prove to us that they can turn things around and see a strong bounce. That's the burden of proof lies on them. Otherwise, we're assuming bearish unless we see otherwise. So thanks again. We'll check in over the weekend. Have a good night.